in 2018, there's been quite a bit of activity on the regulations front, but not so much on ICO regulations in particular. Most of the regulations in 2018 has been around cryptocurrency exchange and DLT provider regulations, AML KYC implementation and enforcement talks around that, and security token and utility token clarification. A lot of countries have updated their rules or provided MOUs on some of these topics. So in 2018, as you can see on this map, there have been quite a few cryptocurrency exchange and DLT provider regulations. Canada, Mexico, and a lot of the small country states in Europe have passed crypto exchange regulations, in addition to Australia and Japan, Singapore, and other countries have also clarified statements on that. And the key takeaway here from cryptocurrency exchange regulations is the fact that over the past few years, these exchanges have been subject to cyber attacks and have resulted in hundreds of $millions of stolen. In fact, according to the Wall Street Journal, since the beginning of 2018, over $800 million has been stolen from cryptocurrency exchanges. So to enhance consumer protection, many countries in 2018 enacted legislation to impose registration and licensure requirements on exchanges. In some of the countries, like I mentioned, Australia, Bermuda, Canada, Estonia, Gibraltar, Japan, Malta, and Thailand. So one of the biggest compliance hurdles or requirements for these exchanges and ICOs in general is dealing with AML, KYC, and counterterrorism financing requirements. Now, since these cryptocurrency exchanges in many countries are classified as financial institution or money services businesses, they have to also, they're looked at as financial institutions, so they also have additional regulatory requirements. So what is AML, KYC, and anti-terrorism financing? AML, KYC, I mean, as most of you know, if you buy and sell cryptocurrency, it is a process of verifying the identity of clients. You send in your driver's license, and they verify that you are who you say you are. And KYC is one of the processes or one of the laws that helps to prevent anti-money laundering, and that is just generally to stop the practice of generating income through illegal activities. And as you can expect, combating the financing of terrorism is pretty self-explanatory, and that involves, preventing the funding of terrorist activities. So why is this important? Why do regulators care? They want to prevent illegal activity. They want to ensure the safety of investors, and they want to make sure that they track down the source of the funds that support, malicious activities. But since these laws are in place, are going to be in place for many cryptocurrency exchanges and now, other blockchain type companies, it could possibly relieve the requirement of, banking requirements. But it also poses some risk. If you are a ICO or a startup that is not compliant with these requirements, you definitely have financial risk and legal risk involved if you don't if you don't comply with the requirements. And one of the banks, in particular Credit Suisse, the other day, they were fined millions of dollars because they didn't have the correct procedures in place to report suspicious activity. Okay, so what is driving the AML KYC financing, counterterrorism financing legislation? The G20, which is a group of, some of the most wealthiest countries in the world, including France, in addition to the, hold on. In addition to the 5 AMLD, which is the directive from the European states, which requires all European states to ensure that cryptocurrency exchanges and custodian wallet providers are registered and licensed by January 2020. So that's why we've seen such an influx in legislation or adoption of these rules, anti-money laundering rules. Next. So as you've known, security tokens have been the talk of the town this year. Security tokens versus utility tokens. And just to recap, just some of the commonalities across most jurisdictions, it seems to be there's been more consensus this year than ever before. And so as far as the security token is concerned, one of the main criteria or differentiators is the fact that, it is deemed as an investment contract or an opportunity, and you're investing in a token that is expected to increase in value. And one of the main hallmarks of a utility token is that it provides access to a platform or service, and of course, you're able to use it on the blockchain network. So there has been no serious regulation on security tokens. However, existing regulations have been clarified and are being implemented in the security token space. So they're just using old regulation that's been around for 30, 40 years on these new digital security token assets. Just one more thing on security tokens. A number of countries have been taking a very particular stance on security token. They are requiring new startups to either register or, in addition to registering, creating compliance manuals around, complying with security token laws. In addition, if you are a security token, if you're issuing a security token, you're not able to trade it on a regular crypto exchange, but those crypto exchanges will need to apply to be a security token exchange. And one of the key takeaways here is that most countries are, especially the US, which I'll talk about next, they are basically saying that all ICOs are security tokens, and but at the same time, they're also taking it on a case-by-case basis. So the recommendation here is for you to just ensure that you're talking with the regulator and ensuring that you're following the laws.
Switch to the next one.
Next. Okay, so I'm based here in Washington, D.C. I have regulators all around me, and I just wanted to give a U.S. perspective on some of the things that are going on the U.S. side. So in the U.S., regulators, and like most other countries, regulators are mainly concerned with protecting consumers from fraudulent ICOs and financial harm. As you know, in the U.S., there's a requirement for most ICOs to have, in order to invest, you have to be an accredited investor, and that prevents lots of U.S. participation. However, the SEC has clarified a few things this year regarding security tokens and Ethereum especially. They've stated that security tokens can transform into utility tokens, but they have not specifically giving guidance on like specific details on when that changeover could occur. Now, enforcement or regulations is not just limited to the SEC. The states are also enforcing local and provincial security regulations. Or earlier this year in May, there was a board of state security organizations investigated 200 ICOs for, scams and other false representations of themselves. So you're not just limited to on the federal level. You also have to consider states as well. Now, the SEC also has a global reach. Thing I wanted to highlight, there was a enforcement matter earlier or late last year for Plex Corp, which is based in Quebec, Canada. Now, this organization, they did not necessarily sell to Americans, but for some reason, there were American buyers, just a few, but the ICO was marketed in the US very heavily on social media and on the website. And the the SEC went after them. And no, this is not just because they marketed to US investors, but they were also deemed as a scam. So they also had other scam properties, but just the fact that they marketed to US investors and inadvertently received US buyers, of their tokens, the SEC went after them. And another thing that you will have to watch out for is, post-ICO and secondary sales to US persons, especially if you are, if the SEC deems that you are a security token. And like I said before, for the most part, they believe that most ICOs are. That is just something that you will have to try to put in place to prevent the transfer of sale from happening. But yeah, so some best practices from the SEC, just on the website, any marketing materials, avoid claims of high and guaranteed returns, countdown clock on the website. Celebrity endorsements are deemed as sometimes scams, claims of SEC compliant, let's try to refrain from using terminology like that. Investing with a credit card if if the website or marketing materials say that you can invest with a credit card, they're looking at that too. And then pump and dump scams, which generally mean that you're promising a high return and then, dumping them very quickly. Okay, so just to wrap up some ICO compliance best practices, just in general, some of the things that you need to look out for is definitely try to have contact with the regulator, seek legal counsel on the status of your token. If there is a way that they could review your white paper, review your processes, that is definitely the way to go. Luckily, in some countries, they are actually requiring that as a part of the process. I believe Malta is one of them that is requiring ICO token holders to have, just best practices all around. And they're also reviewing all these white paper and other documents from the token sale. Definitely review tax and accounting considerations for a token sale in your home country and ICO jurisdiction. Ensure proper bookkeeping, crypto accounting included. You want to make sure that you're keeping on top of all transactions and money. Ensure basic business internal governance and control. ICO is a business, a startup, and you want to make sure that you have policies and procedures in place. You know, all your contractual agreements are signed and up to date, and so forth. And then, you know, any materials that you distribute publicly should be reviewed for compliance by your legal counsel in whatever jurisdiction you are in. And of course, since there's so much attention on AML and KYC, definitely the best practice is to have a vendor, but ICO must also take precautions as well internally and not just rely solely on the vendor. So definitely have some policies or procedures for AML, KYC, ensure that anyone on your staff is knowledgeable and they're following the proper precautions as well. And then, of course, you know, audit smart contracts to ensure security. You know, once you have your token cell, you don't want to get hacked for some reason. And of course, you want to implement other security measures to prevent website phishing. And this is just for, you know, your own protection and for your investors' protection as well. So here I just highlighted a few crypto-friendly jurisdictions. These are countries that have favorable ICO legal frameworks in addition to tax laws. They've definitely clarified a few things in these countries, and they've made it very clear to navigate the ICO process. But some criteria for assistant ICOs, just want to highlight a few things. Of course, you want to ensure that AML KYC laws are, you know, in place, that there are banking opportunities, that there's legal support or industry support. Of course, visa implications and rules, cost and speed of registration, country credibility as well. And of course, you know, if you're far away from your primary customers, that could be also a consideration as well. But these are just some of the things that you should definitely take into consideration when you are looking for ICO to register or report an ICS. Okay, so I mentioned earlier AML, KYC, and other ICO frameworks, securities laws, etc. But you're not just limited to those laws. You're also you also have to take into consideration other laws depending on the country you're in and the type of company or industry you're working in. So, of course, in Europe, you have to also take into consideration GDPR and other privacy-related laws. Advertising and marketing, like I mentioned, in the US, even if you market or advertise on social media, you may need to comply with different rules, depending on the jurisdiction you're in. Identify which laws are multi-jurisdictional. AML, KYC could be one. And other laws pertaining to your industry. If you're an e-commerce company, or if you're healthcare, ICO or blockchain company, you may have other laws that you're required to comply with. In addition, you know, other disclaimers and policies, you know, liabilities that could reflect data misuse, breaches, and errors. But these are some of the updates from the regulatory landscape for this year. AML KYC rules are going to be put in place and it's going to affect the anonymity of ICOs and blockchain transactions. The onus is going to be on cryptocurrency exchanges to drive this. There's going to be a lot of regulatory requirements for these cryptocurrency exchanges. And just ensure that you're taking into consideration cross-border jurisdictions as well. Just because you're registered in or incorporated in Malta or Gibraltar does not make you exempt from other laws in other countries, especially if you're accepting money or tokens from other from investors from those countries. Definitely have to look at it from a country by country basis outside of the initial registration process.